6 weeks ago, I had $487 in my trading account. Today, I'm trading a $100,000 account that isn't even mine, and I keep 90% of every dollar I make. I didn't win the lottery, I didn't get rich parents to bankroll me, and I didn't borrow from anyone. I just discovered a system that most retail traders still don't know exists. And in this video, I'm going to walk you through exactly what I did step by step. Quick disclaimer before we start. This isn't a get-rich-quick scheme. This isn't MLM. This isn't crypto pump and dump. It's a legitimate system that's been used by hedge funds for decades and that became accessible to regular people like you and me only a few years ago. So if you're someone who wants to trade seriously but don't have $500,000 sitting in saving to risk, stick around. By the end of this video, you'll know exactly what I did, what mistakes to avoid, and how to start yourself with less than the cost of a nice dinner. Let's get into it. Okay, before I show you my exact roadmap, you need to understand what made this possible in the first place. Because for 100 years, this didn't exist. If you wanted to trade financial markets seriously before 2015, you had two options. Either you had at least $50,000 of your own money to fund a real account, or you got hired by a Wall Street firm. That's it. Trading was a closed club for people who already had capital. Then something quietly changed. Around 2018, a few companies started doing something nobody had done before. They said, "We have the capital, you have the skill. Prove it to us and we'll let you trade our money." These companies are called prop firms, short for proprietary trading firms. And the way they work is genuinely simple. You pay a small entry fee, usually between $50 and $500. You take an evaluation, basically a test on a demo account to prove you can trade without blowing it up. If you pass, they give you access to a real account funded with their money, anywhere from $10,000 to $400,000. You trade and you keep up to 90% of every dollar you make. Let me show you concretely why this changed everything. 3 scenarios, same trader, same skill level. Scenario A, traditional broker. You open an account with Interactive Broker or DigiRo. You deposit $5,000 of your own saving. You're a solid trader, you make 10% in your first good month. That's $500 in your pocket. Not bad, but it took you weeks of saving to build that $5,000, and one bad month could wipe out half of it. Scenario B, day trading with leverage. Same $5,000, but you use a leverage broker, offering 1 to 10 margin. You're now trading positions worth $150,000. Make 1% on a trade, that's $1,500. Sounds amazing, except a 1% move against you wipes out 30% of your capital. Most retail traders using high leverage blow up within 6 months or even in a single day. Scenario C, prop firm. You pay $400 for a $100,000 challenge. Same 10% monthly return as scenario A. Now you're making $10,000 in a month, and after the firm's 10% cut, you walk away with $9,000. Same trader, same skill, 80 times more money, and you never risked more than $400. That's not magic, that's just access to capital you never had before. Now, I know what you're thinking. Why would they do that? What's the catch? The catch is simpler than you'd accept. They make money 2 ways, and both are perfectly aligned with you not being a complete idiot. The first revenue stream, evaluation fees. This is what most people see. Imagine a firm sells 1,000 challenges at $400 each. That's $400,000 in immediate revenue. Out of those 1,000 traders, around 900 will fail the evaluation. The firm keeps all of that money. No question asked. Brutal but legal. The second revenue stream, profit split. Out of the 100 who pass, maybe 20 or 30 will turn into genuinely profitable traders long term. The firm takes 10 to 20% of every dollar these traders generate, forever. One single profitable trader making $5,000 per month generates $12,000 per year for that firm, and that compounds over years. Now do the math from the firm's perspective. 900 failed challenges times $400 equal $360,000 immediate. 30 profitable long-term traders times $12,000 per year equals $360,000 recurring revenue. That's why a good prop firm can sell you a $100,000 challenge for $400. The cost to them is near zero. It's a demo account during the evaluation, and they're not gambling. They are running a numbers game where 15% of their bets win big and 85% of their bets are tiny wins. For you, the math is even better. Let's break down what your money actually buys you. When you pay $400 for a $100,000 challenge, you're not paying $400 to trade $100,000. You're paying $400 for these three things: the infrastructure, the platform, the data feeds, the broker connection, worth $50 per month if you try to replicate it. The risk transfer. They take 100% of the downside. If your account loses $10,000, you don't owe them anything. Worst case, you lose your $400 entry fee. Compare that to losing $10,000 of your own savings. The capital itself, and this is the part that's hard to wrap your head around. Borrowing $100,000 from a bank to trade would cost you thousands of interest per year. Even if a bank would lend it to you for that purpose, they won't. Prop firms hand it over for $400. It's not a perfect deal. The profit split exists for a reason. They take 10 to 20%. But for someone starting with no capital, that 80 to 90% you keep is infinitely more than what you'd be making on your own. Let me run a concrete 6-month projection so you can see what this can actually become. Say you pass your $100,000 challenge in month 1. You make 5% monthly, which is solid but realistic. Top traders do double that. After the firm's 20% cut, you keep $4,000 per month. Month 1, $4,000. You've already 10x'd your initial $400. Month 2, $4,000. Cumulative, $8,000. Month 3, $4,000. You buy a second $100,000 challenge to scale. Cumulative, $11,600 after fee. Month 4, you pass the second one. You're now running 2 accounts, $8,000 this month. Month 5, $8,000. Cumulative, $27,600. Month 6, $8,000. Cumulative, $35,600. 6 months, $35,600 in pure profit on a $400 starting investment, without risking your own savings. I'm not saying this is easy. Most people won't get there, but the math is real, and that's why I'm telling you this matters. And this is important. You have to actually know how to trade. That's where most people screw up. So let me show you exactly how I went from clueless to funded. Here's the part nobody tells you on socials. My journey was on 6 weeks of non-stop wins. The 6th week I'm talking about, going from zero to trading $100,000, came after 8 months of learning and getting humbled. Let me break it down honestly. Before I paid a single dollar to any prop firm, I spent hours for months learning the basics on free content. And I'm going to give you exactly what worked for me, because the biggest mistake new traders make with paying for expensive courses when 95% of what you need is free on YouTube. The channels I watched religiously: the trading channel for technical analysis fundamentals, Rainer Tio for swing trading and risk management, the Inner Circle Trader ICT for institutional trading concepts, No Nonsense Forex for honest, hype-free education. The books I actually finished: Trading in the Zone by Mark Douglas for psychology side, The Daily Trading Coach by Brett Steenbarger for staying disciplined, How to Day Trade for a Living by Andrew Aziz for the mechanics. After about 8 weeks, I had basic trading strategy I could explain in one paragraph. That's the bar. If you can't explain your strategy in one paragraph, you don't have one yet. Once I felt ready, I went straight to a $25,000 challenge. I had to prove I was serious, right? Wrong. I failed it in 9 days. Then I bought another one. Failed in 12 days. Then a third one. Failed in 6 days. By the time I burned through 6 challenges, I'd spent roughly $1,200. That's 2 months of groceries gone. And the worst part, I had the skill. My demo accounts were green. My backtesting was solid. I just couldn't handle the pressure of trading a real challenge. Every time I hit a drawdown, I would panic, double my position size to make it back, and blow up. If you're watching this and you've already failed a challenge or 2, first of all, you're not alone. Second, the problem is almost never your strategy. It's how you sized your trades. After 6 failures, I almost quit. I genuinely sat there one night, looked at my bank account, and thought, this is over. But before I gave up, I changed 3 things. I dropped down to a $10,000 challenge, smallest size I could find out there, about $100 entry fee. I reduced my risk per trade by 80%, from 2% to 0.04% on the account. I committed to taking only 1 trade per day, maximum 2. That challenge took me 4 weeks to pass. Slow, boring, no big winning days. But I didn't blow up. And then came the moment I'll genuinely never forget. 3 weeks after passing, I received my first payout, $182.43. Less than $200. I screenshotted it, I sent it to my closest friend on a Friday night. It was the smallest amount of money that's ever changed my life, because for the first time, I had proof that the system worked. That $182 payout, I reinvested every dollar of it, plus a bit more out of my pocket, into the next size up, a 25K challenge for $260. This time, with the confidence from the first funded account, I validated it in 14 days. Same strategy, exact same rules. The $25,000 account became my main one for about 2 months. By the end of that period, I had pulled around $2,100 in cumulative payouts. Next step, I bought a $50,000 challenge for about $350, using the profits from the $25,000. By that point, I had a real routine. I knew which hours of day suited my strategy. I knew when to stop. I knew when to push slightly. I validated the 50K in 9 days. Then came the big one, the 50K profits paid for the $100,000 challenge entry fee of $550, and I had enough buffer to attempt it without stress. And here's where things got interesting. I validated the $100,000 challenge in 5 days. Yes, 5. Why was it suddenly so fast? 3 reasons. My strategy was completely refined. I'd executed it on 3 different account sizes. I knew exactly which setups worked and which ones I had to skip. I no longer had any fear of failing. Even if I had blown the 100K challenge, I would have just bought another one with the accumulated payouts. The financial pressure was gone. My position sizing was bulletproof. I knew to the dollar how much I could risk per trade to hit the 7% target without ever coming close to the 4% daily loss. That's the part nobody explains. Your first challenge takes weeks because you're learning to manage your own psychology under pressure. Your fourth challenge takes days because that psychology is already solved. When I started, validating a challenge took me around 20 days. Today, I validate them in 5 to 6 days every single time. From the day I bought my first 10K challenge to the day I was funded on a $100,000 account, 6 weeks in total. Not 6 months, not 2 years, 6 weeks. Because once you stop trying to skip steps, the system actually compounds on itself. And here's the kicker. Even though I spent around $1,200 on failed challenges before figuring it out, by the time I started trading my final funded account, I had only reinvested $100 from my own pocket. Every challenge after that was paid for by the profits and payouts from the previous one. The system eventually became self-funding. Now, before you go open a challenge tonight, you need to know that the prop firm industry has some bad actors. Not everyone in this space is honest, and there are 3 traps in particular that will burn you if you don't know about them. I will cover each one in detail in a future video, but here's the quick version so you can avoid them when you choose your first firm. Trap number 1, intraday trailing drawdown. Some firms have a rule where your maximal loss limit moves up with your unrealized profits. Meaning if you go up $800 on a trade but exit at break-even, you've actually lost $800 of breathing room without earning a cent. Stick to firms with static drawdown or end-of-day trading. Trap number 2, payout buffers. Some firms require you to leave a chunk of your profits locked in the account before you can withdraw. Read the fine print. If you make $3,000 but can only withdraw $400, that's a red flag. Trap number 3, firms that move the goalpost. This is the worst one. You trade for 3 months, you pass everything, you request your first payout, and suddenly the firm discovers you violated some obscure rules from page 47 of their terms. Before paying any firm, check their Trustpilot reviews from the last 60 days. If you see multiple traders saying payout denied for no reason, run. That's it, 3 rules, 60 seconds of due diligence, and you eliminate 80% of the scammers in the industry. I want to be straight with you about who this works for and who it doesn't. If you want to be rich in 3 months without learning the basics of trading, this isn't for you. Close the video. You will just lose money. But if you fall into one of these 3 profiles, you genuinely have an opportunity that didn't exist 10 years ago. Profile number 1, you have a job but a few hours of free time. You can study and practice on weekends. Prop firms allow you to hold positions overnight and across days, so you don't need to be glued to a screen. Profile number 2, you've traded before, but with too little capital. If you have $2,000 in your broker account, your profits are tiny. Get funded on a $100,000 account and the same strategy generates 50 times the income. Profile 3. You want to transition careers gradually. Start while you have a job. Prove your method over 6 or 12 months, then go full-time once your payout consistently exceeds your salary. That's the path I'm on right now. If you recognize yourself in any of these, you are in the right place. Let me recap fast. Prop firms give you access to $10,000 to $400,000 of trading capital for a fee under $500. The model works because of probabilities. They make money on both the people who fail and the ones who become profitable. The path: learn the basics for free, start small, $10,000 challenge, scale from each payout. 3 traps to avoid: intraday trading drawdown, payout buffers, shady support. 3 profiles this works for: side hustlers, undercapitalized traders, career changers. Now, if you've watched all of this and you're thinking, okay, this makes sense, but I do have 8 months to learn before I can trade serious capital, we have one more thing to show you. Fast Funded was built to solve exactly this problem. Instead of taking the challenge yourself, we can do it for you. Here's how it works. You buy a challenge from the prop firm, you give us your MT5 credentials. Our team of professional traders trade the account and completes the evaluation in 5 to 6 days. You only pay our fee after you receive the official challenge passed email from the prop firm. And here's the part that makes us different. If we fail your challenge, we refund you the price that you paid to the prop firm. That means zero financial risk on your side. We are putting our own money on the line alongside you. Once you're funded, you'll also get access to our AI signals, AI vision market scanner, mirror trading on accounts of $100,000 and above, and our private community of funded traders. If this video helped you, drop a like and subscribe. Next week, I'm releasing the video I genuinely wished I watched before I burned through my first $1,200 in challenges. The 5 mistakes that make 90% of traders fail their evaluation. See you in the next one.